Do not do trading unless you are willing to lose money and know what you are doing. But is trading 2-on-2 even safe? Well, that's exactly what we're going to look for in this video. Let's get to it.
I fight to live, I fight to strive. One day I'll have what I want in life.
Hello and welcome to another video. My name is Exo, and in today's video we'll be looking at, is trading 2-on-2 a good platform, and is trading 2-on-2 a good app for you? Now let's jump over onto the app and see what it has in store. So the first thing you have to do is open an account with trading 2-on-2. Then you'll just want to put in your country of residence, so mine's UK, your nationality, again mine's UK, and just keep following the on-screen instructions until you get to the end of this, because I already do have an account. So I'm just going to hop over to that account and show you what it looks like over there. So it'll ask you to choose a type of account you want to open. So if I go top left here, as you can see you've got invest account, you've got CFD account, and then on the right you've got an ISA account. Now CFD account, that's more like trading. So if you put practice with virtual money, you can go on there and have a look. I don't know what the hell I'm looking at, to be honest. I don't do any of this CFD trades and stuff. This is when you can use like leveraging and all that stuff. If you want me to make a video on it, I'll try and learn it and explain it, but as of now it's not in my realm of capabilities, so I'll hop back into my realm. So my realm is invest and ISA. Now the invest account is what I first started, but I do recommend anyone who's got low sums of money to open the ISA account. With the ISA account you can put in up to £20,000 a year, and then that'll be tax free, whereas the invest account, any money on that will get taxed. And as you, oh, this is my practice account. So let's switch to my real account. There we go, my real account. So all this money I've got invested into this account will be taxed. So I do have a nice return, which is beating the S&P 500, so that's a win for me. If you can beat 10% a year, then it's considered doing good, and this one's doing good. I don't have many investments in this account because I did move everything over to my ISA account. So all I have in here is EasyJet, Estobar, which has popped off 51% return. Moderna, that's didn't go well for me, that one. And Neo, just Neo to the moon, baby. And so yeah, they're the stocks I have in this account. So with the graph on top, you can see I have it in 1 year view at the minute. You can put it into 1 day view, which will show you the fluctuations in a given day. So as you can see today it's been pretty flat for this account. And then in a week view you can see there's a bit more spikes, but it's going an upward trend, so that's what we like. And then month view, there was a big dip where I sold everything and went to my other account. And then yeah, again you can see the dip, and with the yearly view even more. The max view will take it back to the start. So I started investing in this account in July 2020, 22nd I believe, 26th. So that's when I started investing in this account. I sold off with, I just sold everything, to be honest, because I wanted it over to the ISA account, but I did make profit, so I weren't mad about that one. So if I head over to the ISA account, this account hasn't been open for very long, and this is my long-term dividend portfolio. So my aim for this, and I'll talk more about my investing strategy in a later video, but this one I just want dividends, and then I'll keep reinvesting that money and just compound and snowball it until I can make a decent dividend income every year. So as you can see, I've got £698 invested into this account. Return of only £2 because it hasn't been over very long. Like, as you can see, it's just boom up there. So it's in the green, which is, can't complain. And these aren't high growth stocks at all anyway. Dividend stocks, the reason they pay dividends mostly is because they don't grow, so they just want to keep their investors happy. So you won't find growth companies generally into dividends. They still have some sort of growth though, so like you have Apple dividend stock, Apple is still growing. So anyway, yep, all my investments on this one are laid out. So as you can see, there's a lot more on this account. I can show you better in my pie, and the allocation at the bottom. So you can see I have a lot of funds in Vanguard, S&P 500, Tesla, Switchback, AMD, and then various ones across. I'm just sticking with Vanguard for this year to see how it goes. I probably will, when I'm a bit more confident with all analysis, just get rid of that and put more into the dividends, like put 2% in each, a bit more, just reduce the Vanguard slowly. So we'll jump over into my pie and I'll show you that. Now on the pie you can see an overview. It will show you how much you invested, how much you have in cash, your returns, and then invest and withdraw funds. Then you have your dividend income, which allows you to invest, which I will do. It will show you total gained, how much you've reinvested, and how much you have in cash. I set a goal for what I want in this portfolio short term. I said I wanted 2k by the end of the year, so fingers crossed we can make that happen. And then in the long run it will need to be up to near the 1.2 mil range to be able to live off that dividend. So that's the goal. So we'll head over the holdings, and then as you can see, it shows you the allocation with the little lines, and then how many stocks you have. So I have 33. You can click on it and it'll give you some information, the actual weight and the target weight. So mine aren't balanced at the minute. That was due to me moving the funds over and then rethinking my strategy. So I need a lot more in the S&P 500, and then got Tesla, need a little bit less in them, AMD, MP Materials. Now MP Materials is quite a cool company. I might do a stock breakdown in that. I can do a stock breakdown on all my companies if you want me to do that. So I've gone through things I think will be there for the future, so all the electric vehicle companies, and then all the dividend kings. So you've got Coca-Cola, they're not going anywhere, everyone keeps drinking that. 3M, people never realise they're using products from 3M, but so yeah, as you can see I own a lot of companies. As I said, I can do a full breakdown on why I own each of these companies if you want, and I'll do it stock by stock, so give you a nice little playlist and content. At the bottom you'll see the edit pie feature, so this is where you can adjust the sliders to your plan. Right at the bottom, okay, yep, you can cancel it, take stocks off by the little X on the top right, and then you have cancel and save the portfolio, and you can also add new stocks in. So you just click the plus button on the top, and then you can search for stocks. I'll show you that in a minute. So as example, just go on a dividend and be like, oh, I need another dividend stock. What stock do we want? We can pick, we'll just go on Exxon Mobil. I don't want this stock, but there you go. I just saw it. There it is. Ta-da, load up. And if we scroll down, dividend yield is 7.6%, so strong dividend yield. We want that. All you do is add to pie, and then click arrow at the bottom, and then you'd have to rebalance your portfolio. So if I wanted Exxon Mobil, I'd have to balance it like that. So that's all I have to do, but we don't want that, so get rid of that. And then I just want to leave my pie as it is, so we'll keep it like that. So go into the auto invest feature. Now this one is very handy as it takes the emotion out of investing. So what a lot of people do is they'll sell out in a crash, or they'll be too scared to buy. They'll be like, oh, is it overvalued? With auto investing, you'll put it up. So as you can see, change schedule. So I can put it in monthly, weekly, daily, every 2 weeks, every 2 months, every 6 months, whatever your income is, you can adjust it for that. If you get paid less often, more often, choose the day. So when I put this on, I'll put it on to monthly and then do the first day. Just makes it simple. You do have to do like a lump sum though to get it going. This is something new, I believe, because I don't think I had to do this before. Or it's just something for the ISA account, but I believe this is new. So, which is a bit annoying, because you have to put a lump sum of 100 in, and then you can put a monthly of £1 if you want to, and then at the top it will show you how many years, if you hold it, what it will look like, or if these like perfect conditions, if you annual nearly 20% return each year with £1 in each month, you change to 100 and it'll say you have 30 million. But as I said, the stock market is up and down, Mr. Market. Talk more about him in another video as well. So that's all there is for the auto invest. Go on to sharing, and this is where you could then share your pie if you wanted to. I do have mine on there that you can copy if you want to. I will say that I do get a share from this if you do that. So, and then I put in the description I do also own Neo in the other account. But this will get changed whenever I make changes, so if you want to follow what I do, then by all means go ahead. So if we hop back over, and then we'll have a look at the how to like search companies. So on the bottom middle right, I guess should say, there's a search icon. Just click that, and then this will allow you to search a bunch of stocks or ETFs. So at the top you have the 2 stocks and ETFs, so we'll look at some stocks, and you have most popular on there. So you can see loads, and I'm invested into a lot of these. I don't know why AMD isn't highlighted, because I should be invested in AMD. Bloody hope I am. Yep, I believe I am. There we go. So yep. And then you can go down and see a load. So say if you like the look of Microsoft. Microsoft is a good dividend one. Just look at the graph. It will show you how many shares you have. So Trading 212 is good because that's fractional shares. So if those of you who haven't got much money like me, then we are still allowed to have our fun within Trading 212. The gain and loss is what the market's doing, and then the FX impact will be the currency exchange. So as you click on it, obviously it says about it, and you can look more into it if you want to, but as you all know, there's foreign currencies and they change. So if you might have it in your favour or not in your favour depending where you live. And then it'll tell you some company details. They're very handy to look at for doing fundamental analysis. Shows you the CEO, all that, the industry, and then the key ratios. I'll do a separate video on key ratios, because that is what you will need to know for analysing stocks. So it'll show you quick things, so market cap, P ratio, revenue, earnings per share, that's EPS, dividend yield, and beta. I'm not sure what beta is yet, so I need to do some research on that one. And then it'll show you financial summary, which is part of the income statement. Again, very important things for looking at when you're analysing a company. Never invest in a company you do not understand. So I try and keep my companies relatively simple. So as you can see, like Coca-Cola, I know what Coca-Cola does, I know how they make their money, I know what's going to cause them not to make money, I know their competitors. So everything like that. Don't treat stocks as just numbers on a graph. They are a company, there is a company behind them. Put yourself in the company's position, and then that'll make it a lot easier for you. One of the easiest things I look at is cash flow. If it has free cash flow, then it's good. businesses always want free cash flow. It's how they make money. But don't get put off just because a company maybe not has free cash flow and be in debt. Debt can be good if it's managed. So you just need to be aware of that. And that'll again come in a later video breaking down them different types of stocks. You can't use the same financial analysis plan on all the stocks, unfortunately. So if we go down, you can click quarterly reports as well. So in the market like this with the pandemic going on, the word I'm not allowed to say on YouTube. So yeah, with that going on, it's better to see quarterly the fluctuations, because everything moves so fast at the minute. You can't rely on history at all. So that will show you a quick graph of revenue and net income, the profit margin. Click at quarterly, show you another one. So as you can see here, revenue's been growing, and along with net income, a slight dip, but it's pretty much back to where it was, so all's good. Click in the full income statement, and then you can find annual and quarterly again, and then they will show you all this different information. Again, I can go through this in a separate video when I do that one. So total revenue, gross profit, all that. So loads of stuff there. You can go quarterly, and again, loads of stuff. So we go down, balance sheet again, same thing. This has more assets and liabilities, so I'm fine with that. Click on that, you see all the breakdown of how it's allocated. Some liabilities are not even a problem with like long-term liabilities, kind of like a student loan. Like the payback is so little, it's not going to affect a company like this. It's just a bit of a nuisance more than anything. But you look at their free cash flow compared to their liabilities, they have enough. They have enough. Yeah, net change in cash, so they have 2.22 billion on standby. Like, they're good. They can get out of it or manage it very well. So, cool. Another one thing, key ratios. That's it. All ratios. So you can click on that, and that'll show you price to volume. Again, that's the trading kind of side of it. Do not do trading unless you are confident and you're willing to lose the money. Just a bit of advice for you. Nothing against trading if you know what you're doing. Just don't like blame other people and yeah, no. Bad idea. And then per share data and per share book value. You can use different types of intrinsic value calculations. This is how you value the company. Each intrinsic value calculation has a different way of doing it. So you can use book value, you can use earnings per share, you can use free cash flow. All depends on the type of business you're trying to analyse. And then it shows you a bit of dividends, which is good for me. Return on assets, return on equity. If you need terminology on any of this, I will do another video breaking down all terminology as well. But you can click on like the trading 12 months, and then that would break it down for you what each thing means. So there you go, TTM, trading 12 months. So it's a very good platform for beginner investors, which is why I chose to use it. Sadly I didn't get the referral link, so I didn't get a free share, but I managed to get a free share when I signed up one of my mates, and he also made some decent profits, so win-win for both of us. Well, I hope you enjoyed the video. I had to break this up into 2 parts, so the next part will be out next week. I just wanted to make sure I covered everything possible about trading 2 on 2, so you get as much information as you can, and that I don't miss any of the key points. So I hope you enjoyed the video. Use all my links down below, especially the one for trading 2 on 2. Check out my Instagram links, all will be in the description down below. Hope you enjoy the video, and I'll catch you later.